Hi everyone, today let's talk about PPI. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So PPI also came in hotter than expectations, and you can see it here, 0.6%. Headline increased 1.6% on the year-over-year basis. So big surge on the PPI. And you can see the core number expectations were 0.2. We ended up getting 0.3. Services went up from 0.4 to 0.6. So everything was higher than expectations, just like we saw on the CPI, continuing to see slightly higher than expectations on the inflation data, except for PCE, which continues to remain in line with expectations. And then we did see retail sales get a pretty substantial jump today, which is part of why I think markets were generally flat or slightly down versus what I would have expected if both of these numbers came in weak. Like we saw last time, we did see a pretty significant drop last time, but this time generally flat for markets here today. Moving over to fear and greed, you can see we're still in greed here at 73, pretty significant step up. You can see markets generally hovering in the same region. Strength, no changes. Breadth back into extreme greed, interesting. Put call ratio, regular greed. Market volume, neutral. Safe haven demand back into greed from fear, and then junk bond demand, no change. Moving over to seasonality, you can see we're in this sideways chop period, and that does seem to be what we're getting. Most of the markets were down a little bit, but generally flat due to the little bit of a rally we saw at the end of the session. So right in here makes sense. And then the weakest day of the month is supposed to be tomorrow, so we'll definitely see if that follows through. But right now, it doesn't seem like it's going to. Moving over to the economic calendar, you can see those retail sales numbers coming in lower than expectations for the core number and for the headline number, but they are not nearly as bad as the previous iteration. You can see minus 0.11%. At least this was positive, even if it was lower than the expected number. And then PPI 0.6 versus 0.3, significant jump higher. Core number beat by 0.1% like we talked about, so not great. And then you can see Fed balance sheet actually went up a little bit this week. Pretty interesting to see that. And then looking at tomorrow, pretty much nothing on the calendar here except for those Michigan numbers. And I think it'll be interesting to see what they say about inflation with the higher numbers we've been seeing. Moving over to max pain, really no changes here. Max pain sitting at 494, put wall at 510, call wall at 520. So right in that makes sense, and that's where we are, right in the middle of that range, and that's kind of where I would expect to finish. Total options, tons and tons here at 5.8 million. Put call ratio still very high, so I wouldn't expect markets to dip too crazy, but right here 510 is that first put wall, which still gives you almost 1% downside potential. Moving over to the charts, you can see SPY was dipping early in the session, consolidated here at support 513.27, dipped below all of those levels, and then right at the end of the session you can see that really powerful up move, 0.2% on that candle, ended up finishing 0.2% down, but it was going to be much weaker if it wasn't for that candle. And look at that volume at the end of the day, massive volume, 5.62 million shares traded, way higher than what we've been seeing here recently. And you can see that even on the hourly charts relative to the other days, and on the daily chart as well, tons and tons of volume at that level. So pretty interesting, and that was a buying candle, so we'll see if that continues to rally tomorrow. Momentum ticking towards bullish. RSI and momentum on the daily chart still look a little bit bearish, but that 513.27 level is very important, and the structure is definitely still intact, even if we're finding a little bit of resistance at 517.06. Moving over to the Tasty charts, you can see they did add back all of my indicators, and I actually did add one here as an ATR trailing stop just to give some direction as well. This is the hourly chart, and it is slowly trending higher with slightly higher lows. These tops have been relatively flat, but the lows are still higher. We're holding that 144 EMA at 513.36. You can see the ATR stop is up around 518.20, and they are bearish right now, but look at that volume on that bullish candle. Like I talked about, massive volume relative to all of the others. Momentum on the volume weighted MACD is slightly bullish, and that's what I was trading off here into the end of the session. So it does look a little bit bullish going into tomorrow's session. Moving over to the NASDAQ, similar thesis. You can see big move down, consolidation, dipped below my level, 438, got all the way down to 436.50, rallied up on that candle, very powerful, 0.14, ended up down 0.25 on the day, but if it wasn't for that, we would have been very negative on the day, closer to about 0.5% bearish. Momentum and RSI are still bearish here, but we're holding the structure above that 21 EMA at 437.33 and the level at 438. It is down a little bit after hours, but not a lot, so Critical level 438, as long as it holds, I'm bullish. If that breaks down, then 433.24 is definitely within range. Moving over to the NASDAQ here on the Tasty charts, you can see similar thesis, still showing lower highs and lower lows, so not quite as bullish as the SPY. You can see the ATR stop is bearish currently. Hit that third ATR band on the hourly chart and then bounced a little bit. And then that big volume still coming through on that candle, so still some bullishness into the end of the session, and it's holding that 438 level, so we'll see how that goes. Current lower band is 436.90, so you would expect that to hold, and then the ATR stop sitting at 442.70 or so. Moving over to the Russell and the Dow. The Russell had a pretty big down move, 1.79%. It still held that 201.88 level after overthrowing it right at that VWAP level. Momentum bearish, RSI definitely bearish on strong volume, so that's definitely concerning. 201.88 critical level. If that breaks, we're going to that 55 EMA down at 198.67. We'll see if that holds tomorrow. We'll see what happens, but this does look quite a bit more bearish. You can see this was a rising wedge, which ultimately is a bearish structure eventually. And it does seem like that structure has broken here. And then looking at the Dow, down just a little bit, still within this structure, still a bullish structure. Momentum, neutral, RSI breaking down. And you can see it wicked all the way to the level 387.77 and then ended up closing at 390, right at the trend line. So in terms of structure, this still looks bullish in my opinion. Moving over to the MAG7 chart, you can see it was down almost 1%, still holding that trend line. Touched it and then bounced. 9 EMA sitting at 350.50, and we are still above that even after hours with the dip, so definitely still holding structure, but momentum bearish, RSI bearish, big volume on the day, and I would expect this to have more selling pressure potentially tomorrow. Moving over to Apple and Tesla. Apple was pretty bullish on the day, almost 1% to the upside. Big gap up, and then it didn't really move throughout the session, so doji. And you can see it's up a little bit after hours. Seems to be holding that 170.90 level pretty well. Dipped below it initially, retested it a couple times, and now we're still holding in that area. RSI looks more bullish, so it does seem like we're finding at least a little bit of a base. 21 EMA sitting at 177.60. Should give you about $4 of potential upside there. Tesla, on the other hand, dumpster fire, down 4.12%. We already called this as a big move down, bear flag, big move down. Price target right now down around 125. Next support 152.42, and then some trend support in that same area. See if it gets there. Right now it does seem quite bearish, and it's selling off even more after hours. So Tesla moving down big, and it seems like it's set to continue. Moving over to Meta and NVDA. Both of these have been the biggest AI plays, and they've actually been a little bit bearish here over the past couple days. Meta down 0.75, NVIDIA down 3.24%. Momentum ticking towards bearish, RSI breaking down pretty substantially. 9 EMA sitting at 885.13, and we are below that here, so 21 EMA sitting at 812.82. Does seem like we're headed in that direction for NVIDIA. You can see momentum and RSI on Meta have been bearish for a while. We haven't seen a breakdown in structure yet. 21 EMA still holding at 488.53, but if this does break, my next level of support is 455. We'll see if that area holds or not. Moving over to the strongest members of the MAG7, Microsoft 2.44%, very powerful, gapped up, rallied, broke the level, new all-time high close, and then similarly here on Amazon, gapped up and rallied 1.24%, momentum bullish. This is still not an all-time high, but this is a relative high on a closing basis, and it still looks strong and it's up after hours, so Amazon and Microsoft putting markets on their back, while Tesla is doing its best to pull markets lower. Moving over to staples and discretionaries, both of these bearish on the day, 0.77 and 0.64 to the downside. Staples holding that 9 EMA and the level here at 75.40. Structurally no change, still bullish, but indicators showing a short-term pullback, and then discretionaries has been hovering in the same area for a while. I believe this wick was a new low, down at 178.92, at least for this consolidation. Momentum bearish, RSI bearish, and with that Tesla move, I would expect this to pull back to the 55 at least at 177.50. Moving over to energy and oil and gas, these have been on a massive run, 0.44 and 1.03%. You can see they both based off here, rallied super aggressively over the past couple of weeks. See if they can continue. It's back above 145.92, got above it yesterday, held that level. 154.13 is the next one there for oil and gas, and then energy sector pushing towards 92.80. Seems like it's headed in that direction. After quite a few powerful days, it is going parabolic, so be careful with that, but it does look very powerful. Moving over to yields, both of these rallied super aggressive on the day on the back of that PPI data and the CPI data just a couple of days earlier. 2-year almost getting to that 144 EMA at 4.72, and then the 10-year very close to that same level at the 144 EMA, sitting at 4.3. Momentum bullish, RSI bullish, and it seems like yields are set to go higher. This did establish a higher low on both of these, tested that level, and it looks set to get a higher high. 10-year looking at 4.5, 2-year looking at potentially 5%. Moving over to the dollar, super powerful day. You can see on the back of that news, held the 21 EMA. On the hourly chart, rallied up super aggressive. Got to the 55 EMA on the daily chart. You can see that here. Momentum ticking towards bullish. RSI looks very good there, crossing above the SMA, headed towards the 50 line. 21 as resistance at 103.64. And then my level here, 103.64, also in that same zone. If it can break back above that, 104.2 seems like the next resistance. But this does look very strong here on the dollar. To breadth, look at this move here on the 20-day breadth, massive move down. Really on both charts it's a big leg down, so that does look quite ominous. Be careful in tomorrow's session. I'll be watching this very, very closely as markets did have a significant break in breadth, and you can see it's here at a lower high on both of these charts versus the highs that we saw early in January. Again, quite ominous for charts. Could be a pullback to support, so do pay attention to that, but in my opinion this is quite bearish, and I think we'll see a bigger move down over the next couple days, which would fit with seasonality going into that options expiration. So just something to watch and a definite bearish indicator. Moving over to bonds, as you would expect, both of these looked very weak on the day with yields going much, much higher. TLT gapped and fell 1.54% right through the trend line, still holding 92.82, which could be an interesting level. But if that breaks down, which it does look like it is set to based on momentum and volume increasing on that sell, I would expect this area to break, and then 89.16 is the next level. And you can see even J&K breaking down from 94.82, still in the middle of the range, so nothing crazy, but it's been basically flat for 5 days, and now we've had a pretty big bearish day at 0.5% down on strong volume and bearish momentum here, so everything looks weak across bonds, which is not a great indicator for equities either. Moving over to the VIX, we did see a positive VIX. We did kind of expect that here. Bounced off of that 55 EMA at a higher low, wicked all the way up to 15.3. We'll see if it can go any higher, get above these trend lines here, up into the 17s or even 1850s. But we did see a big move higher, and I would expect at least a little bit of follow through there on the VIX. Moving over to my accounts, you can see I was down a little bit on the day. Most of that coming from the IWM, which was down 3.74%. I was able to mitigate that a little bit with some calls. I did roll down to the 202 for about another $1 almost in terms of credit. So still trying to collect another $1. That would be about $2 credit in 2 days, which is not bad, about a 1% return on that. And then looking at the Qs, lots of green across the board, even with the shares being pretty negative. I did take the shares off in the mid-session and then add some puts in, which I continued to roll up as markets rallied into that super bullish candle that we talked about. I really could have been in a little bit better shape if I had left those shares on, but obviously it's hard to know whether the stock is going to do anything crazy like it did there at the end of the session. So right now I do have a call here on 439 on those 200 shares, and then I actually had left that put on at 437. Again, 438 is the critical level. If that breaks, I'll take these shares off and then just hold the put to try to get back into the stock a little bit lower, and then holding the call to protect to the downside. And then for this poor man's covered call, 439.78 for $1.55 credit, just continuing to collect on those every single day. In order to mitigate these, you can see open profit and loss only negative 195, and I continue to collect credit every single day on that call side. Let me know down in the comments section what you think of the inflation data, more hot reads, and how is that going to affect the Fed's decision, and when will we get that first cut? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. None of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.